So as we watch a little bit of normal life returning in France, just a glimpse of normality perhaps, how much of that is already discounted, do you think, by markets? How much of that has already been factored in? The broad European reopening story, I mean, or is there more to play for there?
Good morning, Anna. It's certainly a very welcome sight seeing life slowly drifting back to normal. And I think that's the key question, and something that we're asking ourselves. Because when you think about economies reopening, the clear beneficiaries are really the travel and leisure stocks and retail. But actually, when you look at how they performed in recent months, these sectors have been very strong, and they're now trading at or close to all-time highs. So perhaps we need to look slightly further afield from that. So a question we've been asking ourselves is actually looking at other economies that have been through this reopening trade to see which trends in the last year or so have persisted after reopening has happened. So we've been looking at markets like Australia and New Zealand. And some of the trends there you see are very strong housing markets. And that's probably no surprise that if we continue to spend more time at home, we want larger houses. DIY has been very strong, as is construction. But actually, online sales have stuck at twice the level that they were pre-COVID. And interestingly, actually, New Zealand ran out of champagne. So that gives you an idea of the degree of optimism in these markets when economies begin to reopen.
Good morning, Marcus. I think it's interesting making comparisons to New Zealand, for example, who's been so extreme on their borders that while it's been a domestic reopening, they're very, very far from reopening to the rest of the world, given that they're behind a vaccination program. But I also want to ask, if you think the reopening trade in Europe has kind of largely run its course, do you think that's also the case for European equity outperformance overall? Do you think that European equities can continue to outperform a lot of the rest of the world in the next few months?
I'm relatively bullish on Europe relative to other regions. I think the questions to be asked as to equities more generally, considering the run we've had in the last 12 months. But when you look at Europe relative to other equity markets, we are certainly in a better spot in terms of economic momentum. Europe is naturally a much more cyclical market that should be positively geared to inflation. So I think that will come through in EPS numbers, where I expect EPS numbers to be slightly stronger in Europe than other markets. And you must also remember that Europe is heavily underowned by most regional investors who have preferred to overweight tech than many of the commodity type sectors that you find in Europe.
How does that, Marcus, the things you said there about Europe being positively geared to inflation, how does that stack up with what we'd seen during the earnings season, where we got these EPS beats, we got earnings coming in better than anticipated and by some margin in some cases, but still some of those stocks sold off because there was a concern that maybe the market had just run ahead of itself. I wonder how does that rub up against an expectation that Europe should do better from the inflation story?
I think that's exactly the point. And the bulls will drum it up as one of Europe's best ever earnings seasons. But actually, as you rightly say, Anna, the price action during earnings season was certainly very negatively skewed. And that's an indication that investors, particularly on the buy side, were expecting a very strong result season. So companies were being expected to beat and raise guidance, and anything that didn't, unfortunately, suffered quite severely on the day of results. And that's really a debate that we're having, making sure that the fundamentals are in place to continue this strong performance.